Hi friends, today we are going to talk about HDFC Limited. So here we see there is a good opportunity to buy this HDFC Limited share because it's 52-week low point of time. So if we see the 52-week lowest price, that is 2,286, and the current share price of this HDFC Limited is 2364, so which is quite near to this 52-week low. If we see 52-week high, that is close to 3,000 rupees. So this seems to be a good level of price where we can buy this share. Now let's see some company fundamentals or the financials. Okay, coming to this revenue of this HDFC Limited group. So basically HDFC Limited group consists of mainly this HDFC Bank, HDFC Insurance, HDFC Asset Management Company, HDFC Ergo. So HDFC Bank is one of the, or rather it is the largest private sector bank. Yeah. Now let's look at some of the financial numbers of HDFC Limited. So coming to the revenue, we see that from 2017 it was around 61,000 crores, and it has reached to almost now 1 lakh 40,000 crores, which shows the increasing trend year on year. Similar to the net profit, we see that it started with 8,000 crores in 2017, and then we see in 2020 it jumped up to almost twice, which is like 17,000 crores. And in 2021 it has come down a little bit. We feel that mainly the reason of this drop could be some of the government initiatives like demonetization, and then 2020-21 this pandemic hit all of us very badly, and that obviously has caused stress on all the industries, and banking sector is not an exception to that. So we see some dip in 2021, but however, if we see the overall company prospect and the structure, it is quite strong, and it is again a very covering to the larger part of India. So the coverage of this particular bank is also very high as compared to other banks. Coming to the EPS, it goes hand in hand with net profit. So as net profit, we saw a dip in 2021. Similarly, we are also seeing dip in EPS for 2021. Coming to the debt equity ratio. So the debt equity ratio in 2017 was 3.5%, which has come down to 2.85, 2.85, which seems to be a good indicator. Now, why we feel that HDFC Limited, is a good buying option at present. So as we mentioned in the beginning, that it is at the 52-week lowest level, and housing industry overall, the real estate sector in India is supposed to grow exponentially in the coming future. Couple of reasons for this exponential growth is like pandemic is over now, and things are coming back to normal. Interest rates are all-time low in India. Similarly, government is also taking a lot of initiatives like Pradhan Mantri Awas Yojana, where a lot of subsidies are given to the new buyers. In India, almost 66% of the population is aged below 35, 32% out of that resides in cities, and this is estimated to grow by almost 2 times by 2030. So we believe that HDFC stands to benefit going forward, being the largest and dominant player in the housing finance segment, and knowing HDFC's good corporate practices, corporate governance, strong corporate governance, and stringent risk assessment policies, we believe that HDFC is set to grow strongly in the market. The real estate market has also picked up steadily after the slowdown due to pandemic, and demand is back on track now with the increase in affordability and rise in income levels. There are a lot of opportunities for HDFC to cater to the financial need of this sector. So we expect HDFC to deliver strong result in coming future.